All right. Hey, good morning, everybody, and welcome to Market Chat. It's Wednesday morning, and um, we seem to have a pretty quiet morning on the grain market so far this morning, which is unusual, right? We're used to limit up, limit down days, and man, only having a few cents trading range overnight is seems kind of like a letdown. But let's go ahead and jump right into it and get started. And we're going to cover a lot of stuff here today. And my goal today is to is to redirect focus and away from price and um, put it on one really simple point, which is price is dictated by the balance sheet, and the more supply we have, the lower the price we end up with. And the less supply we have, the higher the price we end up with. I know that's basic, but when you're reading all these articles about inflation and the Fed manipulating stuff and will people buy, will they not, all that noise is really just market participants chattering their position, right? And um, and so I think it's really important to kind of put it in context. And um, another thing that I think is really confusing that I want to help clarify a little bit is when we read a USDA report, we're reading it in bushels. But almost every other piece of data that we're getting, like the Brazilian crop, the Ukrainian crop, all these other crops, they talk about it in tons. And so what does it mean? Because we talk 500,000 tons, a million tons, 5 million tons. What is it? And how does it impact us? So the overall conclusion here um, is our balance sheets are contracting globally, and they're contracting really quickly. And I really don't think what this year's yield ends up being is going to change things for the better. I don't think we're going to increase supply. I think that we're going to contract it really no matter what we yield, because demand is so strong. So right in front of you is a world corn domestic usage chart, and one point here. All I want you to see is the trend. We use more and more food every single year globally. I know that's not a shock, but I think it's helpful to look at it from a trend perspective, right? Because we talk about, oh, the yield curve. Well, we better increase yields every year because we're increasing supply or usage every single year radically. So the pressure on yields internationally and all over the world has never ever been higher. So if we look at our balance sheet, okay, keep this in the back of your mind, all right? If we look at our balance sheet, what the USDA posted on Monday, here's what they posted. This is copied right into here and is now our neutral case, okay? So the USDA is telling us that given what they know, a 1.4 billion bushel carryout is going to be our carryout for for the 21-22 marketing year. Now, this is really important to understand. That number starts September 1 and ends August 31 of 2022, okay? This number right here, the 1,082,000,000, that's their number that ran from September 1 of 2020 and ends August 31 of 2021, okay? Now, I want you to see what they've done with this number since January. In January, they were at 1.55. In April, they move it up to here, okay? They drop it to 1,352, and then they lowered it in May, June, and July. They've lowered the carryout every month since January on a very consistent basis. And what they're recognizing are two things. They're recognizing that our supply was lower than what they had originally forecast, and that our demand is higher than what they had originally forecast. Now, most of the analysts that I'm reading think that this number, or this demand number here, is way too low for the next following crop year. And there's a couple of reasons for that. The number one and the biggest driver is is China, right? They are not yet replenished, and their usage is going off the charts higher. So when we look at that last chart and you look at what's happening in China, there is a very good chance that that usage curve, or that demand curve, is going to continue to steepen because they're using more and more. Why? Because their population is eating better. And second, they're confining their hog herds. So their demand for high quality feed sources continues to grow. So this number right here on usage might be very, very low. Now, let's talk tons for a second. We know that the Brazilian crop has decreased by almost 12 million metric tons in the last few months, and the USDA has come down that much. We know that the Brazilians are another 10 million metric tons below our USDA as far as their estimates. And so there's a high probability that the USDA is going to have to continue taking that Brazilian crop down. So, okay, hey, what's 5 million metric tons? You know, what kind of a deal is that? Well, 5 million metric tons is 175 million bushels. 10 million is 350 million bushels. And the difference between where the USDA was and where they need to be is this entire number right here. 20 million metric tons is 1 billion bushels of corn almost. So literally the entire U.S. corn balance sheet would be needed to compensate for what the South American or that the Brazilian and the Argentinian crop just lost. I think that's a staggering number to really get your heads around. Okay, and how do we know that the USDA is too high? Well, it's because the Brazilian people are that low. We just didn't recognize it. The other thing that the USDA did on this last report was they recognized that spring wheat is terrible in the northern plains, right? We have a total disaster on the spring wheat market up there. But yet you go across the border and the USDA barely reduced the Canadian crop at all. So, but with the same weather, with the same issues, there's no way that the USDA is right on what the crop conditions are in Canada. So the USDA has a history of underreporting crop failures internationally. They're doing it in Canada and they're doing it in Brazil. It's the same story, 2 different crops, 2 different setups, but the USDA is very slowly walking those numbers down. And I think that the market is starting to recognize a portion of that. So now back to corn here for a minute. If there's only 4 countries in the world that have enough corn production to export. It's the Ukraine, it's Argentina, it's Brazil, and it's us. That's it. No one else can grow enough to export. And so when those crops all shrink simultaneously, we have a serious problem. Now, I'm not talking about last year's balance sheet. I'm talking about a threat to this year's balance sheet. Okay, I'm now talking about new crop stuff. So if the yields in spring wheat and canola and the Canadian prairies and our prairies, which count as acres, if the yields are really critically low, then that puts yield or acre pressure on our acres for next year, right? Same thing in South America. We must plant corn and we must grow it, and we're not doing it. And if the supply is decreasing by 1 billion bushels, at least in Brazil and Argentina, Ukraine is now hot and running into some issues too, so that could start to be impacted. What about our demand? Well, if just 350 million bushels gets pushed back to us. Now, is that unreasonable? I don't think so, because if you think about the totality, right? There's over 1 billion bushels that have been lost in South America, and look at the demand curve. There's not enough room to absorb it. And so somebody's going to come here to look for corn. And if we take 350 million bushels of it, just 35% of it, then all of a sudden our carryout drops to below pipeline. We don't have room to absorb 35% of the global of the crop shrinkage that we've had in South America alone. Let that sink in. 35%, we don't have the room. And that is with an all-time record yield here. And look at our weather. We are not getting the weather that we need. If we look at the last 7 days rainfall checkup, this is the critical area right here, right? Some of it got 1.5 inches. Most of it got 1/2 inch or less. And on a corn plant that's using 30 hundredths a day and increasing, I don't think that was enough to really put the top end yield back on there. And the argument is, well, the stuff in the east is going to out yield the stuff in the west. I don't think so, because this is where all the new acres were planted. It was all right in here. None of it was over here. So these guys can yield all that they want. This is where all the production's at. I don't think that that's going to out yield where we go. And even if it does yield record yields, fantastic, we're still too tight, because the world balance sheet is shrinking too much. And I don't think that the USDA is really wanting to talk about that. All right, so I think I've made my point on that. Beans, the USDA doesn't even want to talk about beans. That's why they don't change any numbers on the bean balance sheet. Bottom line, a 1 bushel per acre yield hit, and we're out of soybeans. They are critically low globally. All right, so let's look at the charts and let's look at what's going on here. I didn't like this at all last week, and I still hold to that. Okay, so because even though we're bullish, and even though we think that we got to go higher, and even though we think a lot of things, the market can do whatever the heck it wants, and we're not in control of that. So when we broke this low last week with this giant gap, we also lost the 100-day moving average. You got to sell that and hedge it, because the risk then is just too great to the downside. And that risk hasn't yet subsided, okay? We still need to fill this gap, and then we need to hold it. If a really common trade setup is trading up into a gap, waiting for it to be filled, and then selling it, okay? Or reverse, you let it get filled and you buy it. So I think there's going to be a lot of resistance right up in this area if we can get up there in the next few days. But what we did is we sold futures at 518, and then we immediately put calls down at 530 to re-own it. So we put a floor under it. We left our upside completely open, and that's exactly where we want to be, given that it's July 14th and anything can happen. I'm happy being 50% sold with a nice floor, with calls and re-ownership back to the upside. I'm real happy with that position and think it's still warranted. But what we're starting to see, so this is a daily chart, this is a 4-hour chart, and this is a 1-hour chart, okay? This is how we like to look at things. And I like to look at the clouds on all three. And when the market is above all three clouds, that's when you start to see an uptrend, okay? And what do we do the last couple of days? We've crawled ourselves back on top of the 1 hour. This morning, we're trying to crawl inside and up through the 4 hour in order to close that gap. If we do that, that'll put us right back on top of the daily. If we can manage to do all three of those things, crawl back up through it. In order to do it on the daily, you first got to do it on the hour, then you got to do it on the 4 hour. So if we can push back up into here, then there is a shot that we have to really reignite this uptrend. I think it's a question of when. I don't really think it's a question of if that's going to happen. My only question is, do we run down here and take this low out just to scare people a little bit more, and shake out any of the remaining bulls here and really embolden the bears before we rip it higher? I think that balance sheet is so tight, and the risk of it getting tighter is so high. I think that the odds highly favor us moving into new highs and up into the 750 range sooner rather than later. Because let's think about it, right? If our balance sheet is collapsing and we are if our balance sheet is collapsing and we are losing corn everywhere else, we can't run it much lower because that just increases demand. We don't want to do that. We need to ration it. And in order to ration, you got to go after somebody, and you got to take somebody out of the market by making them unprofitable. And you can do that in feed, you can do that in exports, or you can do that in ethanol. And usually it's exports that falter first, but that's because South America, they have some other source of readily available supply. And in this market, they don't have it because of the crop failures we've been talking about. So that puts the targets in ethanol. So you've got to go kill demand in ethanol, and they've got too wide of a margin. So you got to blow way up into here in order to crush that margin, right? The cash basis across the country is running 80 cents to $1 over the September, which puts us at about $6.50 cash corn. So $6.50 doesn't ration ethanol because that's what they're buying today, and they're grinding at an all-time high pace. So $6.50 doesn't do it. We gotta blow through that and collapse that entire margin in order to ration corn when the market decides it needs to do it. So I'm bullish. Nothing about this, nothing about the fundamentals has shifted. If anything, we're getting more and more so because we have heat and dryness returning for grain fill and right after pollination. So I think I think the story is just developing here, and I think we need to stay patient. I'm glad we own calls. I'm glad we've got a floor set so we can give ourselves the time and the wiggle room to kind of manage and give us some time to work through things. All right, here's soybeans. I showed you the soybean balance sheet. It is insanely bullish, and I don't know anybody that could say it's not. The other thing that is I think really going to help drive soybeans is the canola situation in Canada. Estimates are anywhere from 30 to 50% of that crop is lost, which will put a lot of pressure on soybean oil, because we need the oil globally. So I think that's bullish soybean oil, which is also bullish soybeans, and meal is bullish as well because we've got to get it to China because they need that clean feed source that we're talking about. So I think the story in soybeans is really developing. I think we're going to be significantly north of $15 a bushel, especially if there starts to be any kind of a weather issue, because there's just no room for error on soybeans. So now, having said that, what's our plan? If we come back down and we start to take out 1324 or this 1308 range, call it $13 to 1325. If that kind of falters and we blow out all these lows and this one doesn't hold, then we may have something different brewing, and we may be headed lower. I don't know what would drive that today. I honestly don't see it, which always makes you nervous when you can't see the other side. But I think the trend is up. I think it's getting ready to get even stronger. And the last thing I'm going to show you are the weekly charts. The weekly charts are crazy, crazy bullish. We are above all of our clouds. We are right into the buy zone on all of our oscillators. We've held the 50% retracement level, and everything about this looks like it is ready to explode to the upside. And it looks like this in soybeans as well. Same situation. That is an incredibly bullish chart. So when you have a weekly chart that's crazy bullish, and your daily chart and your and all your other charts start to turn bullish, the trend is your friend. You got to stay with it even when it's uncomfortable. I think we're going higher over time, and we just got to get through this little weather market that we're dealing with in order to push it on up. So I hope that that's helpful. Please, I'm happy to dive deeper into any of this stuff if you want, and help support some of those numbers that we threw out. If you have questions, please call us. Remember, there is always risk trading futures and options, and you should only trade to the level that you can financially withstand. And always work with a professional when you are making market adjustments. I hope you have a great day, and we will talk to you next week.